partner at Coach Law Group, and want to thank everyone for signing up for this webinar. It could not be more timely. Adam and I, we talked about doing this several months ago, and we kind of had an outline, and of course, that's been completely thrown out the window by recent events. And Adam and I are going to be concentrating on that. But before we do that, we do want to make introductions. And Adam, I'm going to turn it over to you if you want to say a few words about your background and about NCS.
Sure, appreciate it. And thank you for having me. Adam Crabtree, I'm the CEO of NCS Analytics. We build big data platforms for government agencies and financial institutions. We play in all the fun, high risk spaces, so alcohol, tobacco, smuggling, bootlegging, sales suppression. But by far, our largest sector is cannabis. We currently monitor somewhere between 15 and 20,000 cannabis licenses for our regulatory and financial institutions across the country.
Yeah, that's and Adam, when did you start NCS?
I started in 2015. I'm actually a recovering banker. Don't hold that against me. But I found myself in the same metaphorical chair that a lot of my clients and a lot of folks out there do of wanting to get part of the cannabis cash and sales deposits and things like that onto my balance sheet. At the time, I was, like most bankers, managed to a balance sheet. And so I started trying to figure out a way to get the compliance folks comfortable with accepting cannabis related deposits. I've got a background in math. And so started playing with different types of analytics, predictive analytics, things like that, in the hopes of getting everyone more comfortable being able to show that the deposits were stemming from state legitimate activity. One thing led to another, and I got thrown in front of the governor's cannabis office here in Colorado. And by the end of the meeting, they posed the question, if banks can get to this level of detail, why couldn't the government use it? And it was at that point NCS was born.
Yeah, that's great. And I can tell you that I've worked with one or two clients that use you, and they speak very, very highly of you. And their compliance folks feel very, very comfortable in the cannabis space, largely in part due to the fact that they're using you as a third-party service provider. So that's great. A few words about me. I, like Adam, am a former banker of sorts, although I don't have Adam's math background. But even before being a banker, I was a financial regulator working for the Maine Bureau of Financial Institutions. I was the attorney there for 6 years, and during my final year there, 2014, the FinCEN guidance was issued, and we were getting lots of questions from our regulated entities about just what that meant. And so we actually had several roundtables on the FinCEN guidance with our main banks and credit unions. In September of 2014, I left to join a financial institution. And during my interview there, I asked our CEO whether or not they had a cannabis banking program, and a very uncomfortable look came across his face. I was still wearing my regulator's hat at the time. And he said, "Well, I think we have a few accounts." And I told him that I fully support having a cannabis related program. However, if you're going to have me on board, we have to develop a program with policies and procedures to ensure that we're compliant. Anyway, on the way home, he gave me a call and offered me the position. I think he was a little bit worried that I was going to go back and report to our superintendent on this. So anyway, in 2014, I joined NFI. As Adam well knows, you wear a lot of hats when you're in banking, and I was, uh, and that was certainly the case for me. I was the general counsel. I also headed up our BSA program, and essentially started our cannabis related program. Our CRB program, I'll refer to CRB going forward, cannabis related businesses grew exponentially when I was there. No credit to me. We just happened to be the only game in town. And our board kind of went back and forth on the lending piece. We never quite got there when I was there. But just on the deposit side, our fee income represented a very, very hefty chunk of our ROA. So, and that got me in the door quite often with our CEO. We were no longer a loss leader, a revenue producer. Anyway, many, some of the people on this call may be familiar with PBC, that conference that happens in Washington, D.C. every September. Josh Radbot, my fellow partner at Cogent, he and I crossed paths then. They were looking for an attorney with some expertise in cannabis banking. And so, anyway, I've been with Cogent now for 2 years. And my main function is to assist financial institutions either getting into the cannabis space, or if they're already in the cannabis space, looking to get into the cannabis lending space. I've helped a couple folks who've gotten into a little bit of trouble with their regulators with their cannabis banking program and have sought, looking for some remediation, helped with them. I've worked with a couple that have extremely well developed mature CRB programs, but have kind of gotten bogged down a little bit with some inefficiencies and are looking to make their programs more efficient and cost effective, but also wanting to stay on the right side of their examiners. So I've helped a couple of financial institutions do that, and I'm also just on call if a BSA officer has a specific question about how to handle CRB or a SAR filing, or wanting some clarification with their policy and procedure. I do pride myself on getting back very quickly to my clients. I'm pretty accessible, so I've helped in that regard too. So those are kind of the four or five things that I help financial institutions with. I also I'm Maine qualified, and I work as an external general counsel for Maine banks and credit unions. So those are the sorts of things that I specialize in. So, Adam, let's cut right to the chase here and talk a little bit about what's been going on recently in Washington. And
Uh,
I think maybe we should start with rescheduling. And first of all, what's been happening? I'm going to turn it over to you. I've been kind of a little bit long-winded, so why don't you start us out?
I mean, the rescheduling stuff's interesting. I think there is a lot of ambiguity. I mean, for all we know, while we're doing this, it might get rescheduled. The rumor started last week that it was either going to happen Friday or yesterday. There was obviously the statements coming out of the president's office that they're strongly considering it. I do think there is a lot of confusion around what that actually means, which I would imagine is what you and I are going to talk about today. Um, Schedule three, I would say, generally speaking, will be a positive. I don't believe it's going to necessarily have the huge impact that people believe it does. Good or bad, I've seen a lot on both sides of that, but I feel like from our perspective and from financial institutions' perspective, the biggest impact is going to be to their clients with the removal of the 280E requirement. I would say that will have an immediate positive effect the whole way around. The simple fact of whether you were looking at that from a stability point of view or the fact that their clients are going to have a lot of new revenue. Moving away from that 70 to 80% effective tax rate means more money on deposits, which is good for our FIs, means more money back to those businesses to where they've got more money to grow with, making them better clients, hopefully some capital for expansion. But yeah, I mean, I think it's certainly an interesting aspect that's going on right now.
Yeah, I think one of the first things you pointed out is probably the most important, and that is, the compliance requirements, the FinCEN guidance doesn't go away. And I remember at listening to James Cole. He was the keynote speaker at the PBC conference several years ago, and it was a very kind of different keynote speech that he gave. He very publicly lamented the fact that his his memo, which was kind of formed as the provenance for the FinCEN guidance, created this kind of unduly restrictive environment for banks and credit unions uh, to bank CRBs. And in spite of that, very public lamentation, nothing's been changed there. The FinCEN guidance, is now 12 years old. I think there has been a lot of criticism in legal quarters as well as from policymakers that they haven't yet updated their guidance. And until that happens, the rolling SARs have to be made. The determinations about the elevated SARs need to be made. The enhanced onboarding, the enhanced ongoing due diligence, all of that stays in place. But as you also point out, 280E goes away. So I think that that is certainly going to have the effect of more institutions thinking about opening up their cannabis space to lending, given the fact that their profit margins are going to be significantly higher. Their balance sheets are going to be a lot better than they were. Um, there are some additional risks associated with lending, even though the FinCEN guidance doesn't make a distinction between lending and depository services. It's a pretty thin document, as you know, Adam. It basically just, I think the terminology is financial services throughout. But there are some additional risks associated on the lending piece. Having said that, my own view is that I think there is some de-risking if Schedule 3 occurs. They're still going to be operating in an illegal market, if until the medical businesses become FDA approved, registered, and licensed. The adult use, the recreational side, that will remain illegal as well. So there is still obviously going to be those BSA issues to deal with. So that's an important piece to remember.
Well, and I think you touched on something that's interesting. I think that de-risking, while yes, there will be some, I think that it will be more of a perception de-risk than an actual de-risk. The movement away from Schedule 1, the most serious of our drug categories up there with a lot of the heroin and other fun things like that. So the perception shift, I think, is actually going to have a larger impact on it. The potential that there could be research on it, obviously, it's not a guarantee, but it will make it easier to secure those DEA licenses to perform research and things like that, which is something that's sorely lacking in cannabis. But I think it'll be more of a perception than an actual. People will take another look and say, okay, we've moved away from the worst of the worst. Now we're in this category with things that don't make us as uncomfortable, things like that. So I'm hopeful that that will force conversations, a little bit of a perception shift, maybe even expansion of that FinCEN guidance, although I won't hold my breath. It does make me laugh that I think the only folks that like documents more than lawyers are bankers. And so this entire cannabis industry is built on an 8-page document from 12 years ago or whatever it was, which just kind of cracks me up because I've got an odd sense of humor. But I mean, there is no industries that like documentation more than bankers and lawyers. So the fact that all of this is predicated on such a thin document, as you referred to it as, is still kind of mind-boggling and somewhat humorous.
Yeah, I would agree with all of that. I agree with your perception comment too. I've always viewed, the greatest, I see I see there being three circles of risk, I think, with cannabis banking. And, if you kind of look at this as a Venn diagram, they do overlap a little bit. But by far and away, that largest circle is the compliance regulatory risk, making sure you're following the FinCEN guidance. And, one of the risks with the FinCEN guidance is the fact that it's so thin and gets interpreted very differently by different examiners. And, what that meant in 2014 and what it means now are two entirely different things. I think these examiners, they go around, they see best practices at one institution, and then they suddenly become expectations at the next institution that they examine. And if you're not doing that, even though you won't find it in writing anywhere, you're gonna get cited for it, either as a recommendation or a finding. So that by far and away is the largest risk, that BSA compliance risk. And then in this Venn diagram, the other two very, very small circles of risk that I see are the legal risk. There's not been, even though, there are there's the aiding and abetting argument, there's the RICO violations that, on paper, black letter law, financial institutions are arguably in violation of. But there has not been one prosecution of a financial institution for banking cannabis. And, that makes sense given the very, very strong public reasons why cannabis cash should be safely vaulted. I think, prosecutors understand that. And then the other, really, very small risk, are the reputational risk. And again, that's very overblown too. Cannabis no longer has that stigma that it once had. Uh, People are not even, at my financial institution, we had a pretty conservative base of our non-CRB customers, and nobody batted an eyelid because we were banking cannabis. So I think the reputational risk tends to be overblown. I think the real reputational risk might be getting into the cannabis banking space and then not realizing what you're getting into, and then pulling out and being their last boyfriend or girlfriend. Because, these CRBs are looking for a stable uh, financial partner. And so I think that's really where the real reputational risk. But anyway, again, I'm being long-winded, and I agree with you. It's more of a perception thing than any. Uh, if it does get Schedule 3, there's some speculation that the examiners might take a more fluid or flexible approach toward the FinCEN guidance. I don't know that. I'm no longer a regulator, so I can't speak for the regulators, but that could happen, but who knows?
Well, and I think, as you mentioned earlier, it completely depends on the individual examiner, their jurisdiction, whether it's state, whether it's federal, the different agencies, they all have a different perspective on it. Obviously, they all want the same end goal, but depending their exposure and the directives they've been given really shapes what they're looking for. So we obviously try and exceed the most strenuous, because that's a given for what I do. But at the same point in time, it's one of those that they aren't immune to the perception shift as well. The fact that they go from examining a program built around a Schedule 1 drug versus a Schedule 3 drug. Did it actually change overnight? Did the plant magically bestow different qualities? Absolutely not. But again, it's that perception shift. And as humans, we're not immune to that. So I think that will factor in directly or indirectly, hopefully in a positive way, but never know on that one.
Yeah, and I think, the other effect that Schedule 3 might have is, as you pointed out, because of this perception shift, I think other boards, other senior management at FIs that are not banking cannabis are going to think again, and that is going to invite competition. and that's a good thing. But that's also going to have, I think, some downward pressure on pricing. But already I'm seeing, I'm seeing that to a certain extent that that we are in an environment now where, unlike when I was at my bank, when we were the only game in town, there is competition out there, and you have to be more price sensitive, both on the depository side and on the interest rate side if you're in the lending market.
Well, I think part of that pressure is actually due to the shift in overnight rates. I mean, there's not been a time in my life where you could put money into a savings account or a money market account and be paid 5, 6%. And so I think that there was a rush to cannabis companies from a lot of institutions that, frankly, may or may not have been aware of what they were getting into or what it required. They just saw the headlines, and this will be my new cheap deposits where I don't have to deal with the overnight rates to such an extent. We are seeing some exits now that those overnight rates are starting to come down because, well, a lot of these institutions learn two things. It's more complex. It can be done. I'm not going to get into that. I don't do the scare tactics. It can be done, but it's not exactly as easy as banking your normal restaurant, gas station, things like that. But the other part of it is, I think a lot of institutions realize that due to the lack of lending, there isn't this huge pool of deposits. Much of that cash flows in and then flows right back out. Bills, payroll, rent, all of those kind of things. And so it's not these mythical pools of cash that are going to solve all of your problems. So we did see a number, especially as those interest rates peaked, that wanted to jump right into it. It was going to be their silver bullet, and then they got a dose of reality. So it's kind of nice to see the institutions that are in it for the right reasons are the ones that we see staying around, not so much those that saw a quick fix to their other ailments. So that's been an interesting one to watch as well.
Yeah, for sure. So, Adam, I'm going to put you on the spot now, getting back to the recent media reports we've seen about rescheduling. Do you think it's going to happen?
Um, I frankly have no idea. I would wager that whatever I actually believe the opposite will happen. And that's just a combination of my luck and how it seems to go these days. It's certainly being talked about more than it ever has been, but there's also a lot of other things going on in this world. And so it's whether or not it's prioritized. It's also cannabis in general is one of those interesting ones that as the state comes online, especially with adult use, the broader support for the push forward declines because it's, hey, I can get this here. I don't really care if my neighbors in Wyoming or Idaho or whatever can get it. I can get it here. And so it's kind of one of those interesting social topics that the support it actually isn't as loud as we're getting more folks that are in markets where it's allowed. I mean, we're at 40 odd in some form of medicinal decrim and adult use. And so I'm not sure. I'm not sure whether there will be enough pressure to force it to be a priority or not, but it's certainly being talked about a lot.
Yeah, I remember 8 years ago now, marching up to our CEO's office and telling him that it looked like what was then Safe Banking Act was going to pass, and how if it did, that would represent some de-risking and some adjustment on our pricing. And of course, I was crying wolf back then, and I have given up trying to predict Washington since then. I guess I do hold out a little bit more hope that and it's again it's only an incremental change. It's not the big from especially from a financial institution perspective. But whatever one's feelings about Trump are, he is people. The influence seems to go from the top down rather than down up. And I know there's been a lot of uh, friction, I think, from the GOP party, in Congress against a softening on cannabis. But again, whatever one thinks about Trump, he's kind of his own man on this kind of thing. But the other thing, you're absolutely right. What's going to happen tomorrow in the world? could overtake everything. And even we heard Trump, I think it was on August the 11th. How many months ago was that? Saying that there would be an announcement about rescheduling in the next few weeks, he said. And of course, that didn't happen because events kind of there was so much going on, both nationally and internationally, that it just got put off.
Well, and I think it makes me laugh that you brought up safe banking. That started in 2013 here in Colorado with Representative Perlmutter. And so it's one of those that every time we think it's getting close, I mean, that's what, 13 years or about to be 13 years that hasn't gone through. And then, there's the high points where it gets a little further. In 2023, it was the first time it had ever been heard in the Senate Banking and Finance Committee, things like that. It sailed out of that. And so it's kind of one of those that it keeps getting just shy, and then it'll get a new name, safe banking, safer banking. It was stable coin or something like that for a hot minute. And so that's another one of those that just makes me hesitant to make any proclamations because I would have thought safe would have been done forever ago. It logically makes sense. It doesn't reduce any of the requirements, but it does give financial institutions a little bit more comfort, incentive around, hey, if we're genuinely doing this right, we're taking those steps, then they can't come after us for just this. But I mean, safer seems like, or safer, again, whatever it is these days, seems like much more of a no-brainer than the rescheduling stuff. And yet we haven't been able to see that nudged across the line yet either.
Yeah, and one of the most important things from my perspective about SAFER, if it ever did get passed, is that it mandates the financial regulators to put out further guidance on
Yep.
cannabis banking, which, as I alluded to earlier, I think is one of the greatest risks associated with cannabis banking. That is that we don't have a sufficiently delineated regulation in place or examiner's guidance on cannabis banking. And banks and love certainty. That's what they crave.
Yep.
And there are no definitions in the FinCEN guidance. There's no official staff commentary to explain what a provision means. And that regulations have that advantage.
Agreed.
I do want to talk a little bit about going back to rescheduling. And again, you're a very prudent person, given my putting you on the spot in terms of predictions. But and I've talked to a few other lawyers about this. The Controlled Substances Act actually would allow for again, I'm not saying that it's going to happen, but if it were to happen, there are three possible avenues for rescheduling to take place. I was talking to another attorney at Denton's, whom I respect very much, and he pointed me to a provision in the Controlled Substances Act, which he thinks would allow Trump to do this not by rulemaking, but by executive fiat, basically ordering Pam Bondi to do this within 60 days. So that we could, again, if it were to happen, we could see a fast tracking on cannabis banking. And executive orders tend to be the flavor of the month these days. And then there's the rulemaking with notice and comment period. But there is also precedent for rulemaking, fast tracking rulemaking without notice and comment. And that has actually happened with several other, or at least one other drug being rescheduled. There was a kind of a fast track rulemaking without notice and comment. But again, that's all if it happens. And while I might have an inkling more optimism than you, Adam, one never knows. You just don't know.
Yeah, I mean, I would like to see it happen. And I think it would be a net positive for all involved, whether it's the perception, whether it's the making it easier on these businesses to be treated like a normal business. I mean, we've been in cannabis long enough to know it. Everything is happening today every day. And we've been hearing about some of these things since we kicked off way back when. And so I would like to see it happen. I am cautiously optimistic that this is forcing enough of the conversation that we will see some movement. I
Yeah.
think that one of the worst things that can happen for a lot of these folks is the tomorrow never comes, because we are seeing it has an effect on the stock market. It has an effect on these businesses. It has an effect on people that maybe they were going to start accepting cannabis accounts, but they want to wait and see. Well, if tomorrow never comes, then we've delayed that for no reason. And so I don't love the ambiguity, but I mean, come on, that's our world. Is that's the only thing in cannabis that's constant is the inconsistency.
Yeah, you mentioned the stock market. I mean, the cannabis stock prices, they've been wildly fluctuating. They went up, some of them went up 40% on the initial announcement, and then they went way down. I think on Monday, everyone expected something more formal from the administration. It didn't happen. So,
Well,
yeah,
and also profit harvesting. I mean, a lot of those stocks have been trending down, so they saw that spike. A lot of the long-term holders went ahead and harvested profits out of that, which then rocked it back down. And so that ambiguity and instability is not ideal for a lot of these companies.
yeah. So I think we've set the world to rights on rescheduling. What about this recent hemp ban in the appropriations bill
Ooh.
back in November? I mean, talk about mixed signaling, right?
The hemp stuff is an interesting one. Obviously, I think that where we're at and the pendulum swing is a very strong response to what I believe was an exploitation of some of the loophole stuff. The original Farm Bill, I think, had I don't think it was intentionally done. I just don't think people understood we'll lovingly call it the innovation that hit hemp with the siphoning and extracting the different THC molecules, the things like that, to where it turned into such a large industry. And so I think the swing back was the strong response to that. I mean, whether it was the Delta 9 issues from a few years ago, whether it was the hemp dispensaries that were popping up, I think there was a very interesting swing back. I think probably the most fascinating part to me was Senator Paul's amendment to strip it out of the budget stuff, and 74 senators being like, nope, not doing it. I don't know about you, but I can't remember the last time 74 senators agreed on anything. This wasn't like party line 51-49. 74 were like, no. So I thought that was fascinating from an outside perspective on that.
Yeah, it's almost difficult not to see this as almost like a personal vendetta by Mitch McConnell, because I know back in September, when the farm appropriations bill was being negotiated, uh, Mitch McConnell tried to get the loophole sorted out, and Rand Paul said no way. And Mitch McConnell back then relented, and I'm thinking he must have had in the back of his mind, oh well, we I'll get this sorted out in November with the appropriations bill. But it's astounding to me anyway that something that is such a policy issue, gets put into an appropriations bill at the 11th hour, holding a lot of Congress people up for ransom. Do we pay our federal employees or do we ban hemp? I mean, a lot of them voiced a lot of frustration. Nancy Mace is another, you mentioned Rand Paul, but Nancy Mace is a Republican congresswoman from South Carolina. I think she voted for the appropriations bill. And then about a week and a half later, she she proposed a bill repealing I think it's Section 781 of the Appropriations Bill, which is the redefinition of hemp. So, she's one of these folks who was held up to ransom.
I
Um,
also think it's interesting that in our world, this was a huge, huge news, but it kind of flew under the radar from a perspective of that was something a lot of people learned about long after. I mean, it's hard to compete when you're talking about paying federal welfare, federal workers. The fact that what was it, 10 to 15% of all commercial airlines were those flights were being canceled. And so back to whether this rises to the top of things being dealt with, it kind of slid under the radar. It was an afterthought in a lot of the news clip articles I would get, with the exception of the cannabis and this industry centric ones where it was very prominent. But a lot of people had no idea it happened. They were like, "Wait, what?" Yeah, guys, we just completely shifted an entire industry. And I think the other part you touched on is they've been working on that language for quite a while, but they could never quite get it there. So it was an interesting vehicle. But I think that that point that you made, that McConnell had tried before, and it's been something that's been talked about, is something that I think a lot of people don't understand. This wasn't just a last second out of nowhere. They've been working on a solution for this. They've just never been able to really get it across the line. And so I agree it was an interesting vehicle to choose. And it's certainly going to have some interesting impacts, especially on financial institutions.
Well, I was just going to say, Adam, for those financial institutions that are banking, I'm going to call it infused hemp product, IHP, just because there is this industrial hemp, which is another category. But, for the IHP, for those financial institutions that are banking IHP accounts, it puts them in a real conundrum right now, because in my view, they're higher risk accounts than cannabis accounts, uh, with all of this uncertainty and the fact that the appropriations bill has essentially recriminalized the IHP industry. If I were a chief risk officer at an FI right now and I had an IHP portfolio, I would certainly be battening down the hatches, making sure that you have an accurate grouping of those accounts, and you might want to be thinking about freezing additional accounts until we get some further clarification. One of the things that I've neglected to point out is that this doesn't take effect until November 2026. So, a lot can happen between now and then. We've both talked about these bills in Congress to get that section of the appropriations bill repealed. There's also, I think there's going to be a lot of lobbying that's going to be taking place between now and 11 months from now, to try to somehow soften that recriminalization. Well, we'll see.
Well, and the accounts are certainly one aspect of it, and a big aspect, but I think the more concerning one for a lot of institutions that were working in that space is a lot of them have loans out to these businesses, and depository accounts, regardless of whatever cannabis, anything like that. You remember we built into your deposit account agreement, hey, we can close your account at any time, and there's nothing you can do about it. But the lending that's out on these, some of the larger commercial real estate portfolios and things like that, those aren't as easy to make go away. Yes, if it's depository, your tier one capital might take a hit, things like that. But having outstanding paper, and whether it's they can no longer make their payments because they've suddenly been moved into this new one, or the fact that you really don't want that outstanding paper out there anymore, have what, 340-ish days, which at least it wasn't an immediate impact. I think that would have caused a lot more issues. So they give them a little bit of time to figure out, but this is going to be a very chaotic year in that space.
It sure is, and you're quite right to point out it's so much more of a conundrum if you've been lending to these IHP industries. And I would be looking very, very, or having an attorney look very, very closely at your covenants, your loan covenants, to see what recourse you can have. And then I would be having some real heart-to-hearts with your IHP customers to let them know what the scoop is. And on both fronts, both the lending and the deposit side with your IHP customers, I would be communicating with them right now, letting them know you're monitoring the situation closely, and that while things are up in the air right now, to let them know that at least you have a close awareness of what's going on, and that your ear is close to the ground in terms of what's going on. I would also consider reaching out to your financial regulator to let them know, hey, we're in a bit of a spot. Can you help us out? You know, and if you're a state charter, you might have a bit of an advantage there, because I think state regulators tend to be a little bit closer to at least willing to advocate a little bit for you. We the institution I worked for was state chartered. We always made sure that we had a state examiner on the premises during our examinations because of our CRB program. So you might want to think about that. You might want to think about reaching out to your local politicians to let them know, we employ this many people in our state, and we need some help.
Yeah, without a doubt. And I would actually like to take your advice one step further. Based on what I've seen in some of the institutions since this change, I would actually suggest not only talking to their in-house counsel, but actually reaching out to specialized counsel. Not that you need a plug since we are on your podcast, but a lot of the advice we've seen coming out of in-house counsel has verged on inappropriate interpretation, in my opinion. And so they need to be seeking out the experts, the ones that are in this space, the ones that know what's going on, ones that have been there, not your general banking or business attorneys. You really need to seek out some specialized support, especially if you have a large portfolio. Time's ticking. Like this is a set clock as of now, and that's kind of the rules we have to operate. And best laid plans, something else changes, but in the meantime, we've got to operate under the conditions we've been given.
Yeah, it's a very, very specialized area, and it's a very, very gray area too.
Yep.
And so it does require a lot of nuance. What I've, recommended to a few of my clients, we can actually reach out, Cogent can reach out on a kind of a no names basis to your state regulator to let them know, what the issue is here. And I used to have a direct line to FinCEN. As a regulator, I don't have that anymore, but state financial regulators do have a direct line to FinCEN, and
Mhm.
you know the and it in that way this issue, this conundrum that banks have, that can kind of percolate up to the regulators that count.
So you put me on the spot. I'm going to return the favor. We keep talking about your state regulators and things like that. I think one of the interesting reasons that hemp has been able to grow as large as it has to a substantially very large market is because it was able to enjoy interstate commerce. What's your take if the interstate commerce aspect of hemp goes away? Does the industry, what does that look like for you?
So those are going to be really high risk accounts. If I were an FI, if I were an FI, chief risk officer, one of the things I would be doing is not only making sure that I've got an accurate count of my IHP accounts, but I would be distinguishing those accounts between the intrastate accounts, those that are operating within a state that where hemp is licensed, is under some kind of a licensure regimen. But then I would also be hiving off those that are operating on an interstate basis, because those accounts are problematic. Again, assuming that the hemp ban stays in place, those accounts are going to be
Oh,
very, very problematic. And you're going to assuming that the ban stays in place, nothing else happens. I think you're going to, want to be thinking long and hard about getting rid of those accounts if we don't see anything soften within the next year.
Mhm. It's certainly an interesting one. I mean, that hemp, because of its previous classification, had a lot of advantages: the interstate commerce, the more normalized banking, I should say, the online ordering, wider acceptance for payment processing, things like that. And so it will be interesting to see how that industry can adapt, if it can adapt, what states are willing to put in that framework, things like that. It's certainly going to be an interesting one.
Yeah, that's right. Yeah. And going back to, my your recommendation that, you audit your hemp accounts, there I would assume I would go under the assumption that they're all IHP accounts. I mean, there are yeah, chances are I think the industrial hemp, I think that's the terminology they use. They were talking about rope versus dope back during Senate hearings. I think your rope accounts, your industrial hemp accounts are so f few and far between that if you're at all uncertain, I would certainly treat even those accounts as IHP accounts, infused hemp product accounts.
Well, and I think your rope accounts, I think they are okay with these changes.
Yeah.
A lot of them, at least in my experience, are very willing to discuss the rope. I still find the most interesting industrial hemp application is if you mix hemp and concrete, it evidently makes it like 30% more insulative and all of that kind of stuff. So I find that stuff fascinating. And I think a lot of them are breathing a sigh of relief of we don't want to be lumped in with the ones that are doing the cutesy workarounds and things like that. We want to be able to be talked about on our own for the cool things this plant can do. Granted, you talk to some of those folks and you almost feel like you're on a late night infomercial. It slices, it dices, but wait, there's more. You can also do X, Y, and Z. But I will, all joking aside, say there are some pretty cool things that the industrial applications of that plant can do.
Yeah, absolutely. So Adam, we're coming close to the end of the hour. I think we might have a few questions, but I just can you talk a little bit more about NCS and how you distinguish yourself a little bit from your competitors?
Sure. I think we're in an interesting spot since we only work for government agencies and financial institutions. In fact, if you're in one of our governmental states and you visit their website, you're probably looking at our data on those interactive dashboards. And so we kind of sit aside from the point that we don't interact with any of these industries that we analyze. And so we don't do anything with them indirectly or otherwise. So that kind of shifts where we sit. We sit alongside of our clients in kind of a different perspective. The other aspect is we're more of an event driven system. And so we process somewhere between 80 and 120-ish million data points a week. And what we do is we take all of that data, bring it into our system, analyze it, score it, tier it, and display it to where you are directed to where your attention is needed most. It's really driving that efficiency that you mentioned earlier. I recognize that not everyone loves data as much as I do. And so we've made it easier to see the activities that are creating the biggest risk to your institution or to your regulatory market, all of the fun, the inversion, the diversion, the sales suppression, all of that to where it makes it very easy to understand what's going on. And we're continuously pushing the boundaries on what's possible. Earlier this year, we actually were able to partner with Wharton, a really fancy school that would never dream of letting me in, to help design some new functionality that makes it easier to understand how all of this interacts, why these two events in combination are actually more risky than when they happen on their own, all of that in a very easy to understand manner. So a lot of our clients are the larger institutions, things like that, that really want to become more efficient. They want to increase the number of clients per BSA or per compliance officer that they can take on without compromising those high standards that they've set. Not to mention, we have tons of data, which allows me to do a lot of the predictive and behavioral analytics that we do. I actually hold the mathematical patents on our predictive analytics. And so ours is a bit different of an approach, but it's a lot of fun. We are able to play in mountains of data that we can show things that no one else can and make it easy to understand. So, yeah, we have a lot of fun with that side of things.
Adam, you've mentioned efficiency and analytics, and those are the two key things that are going to set financial institutions apart from their competition. We talked about all these compliance burdens associated with cannabis banking, and we also talked about the fact that we're in a new world now with competition and how that's having a pressure on pricing. And the way to solve that is, as you've just mentioned, through efficiencies, building in efficiencies using trusted third-party service providers such as yourself, uh, so that the FI doesn't need to do all that legwork itself, and also building in the analytic tools that you have so that the FIs don't need to do all their work itself. And that in turn will allow financial institutions to become much more competitive and also serve their CRBs much better.
Agree.
Yeah, we're in that world right now. So do we have any questions here? I want to be respectful of folks' time, so I don't want to go over the hour.
Chris, we do. We have three questions actually.
Okay.
The first one, maybe since we're already talking about NCS, the question is, what differentiates NCS from other cannabis banking software solutions?
So, in addition to what we just said, because of the nature of our regulatory work, we've actually had to go pretty far above and beyond in the solution we offer, in the security, the underlying work that we do, including things like we actually have to bring in not only the normal auditors for tech and things like that, but I actually have to bring in a firm to do audits on my models, on everything like that. It's called model validation, and I believe we're still one of the only cannabis firms that have that. But you remember from your days in the regulatory, that's a standard for bank models. If a banker is using something to make a decision, it has to be audited. So things like that, we really do put ourselves into a different realm because of our responsibilities as a regulatory partner that frankly our financial institutions just get to enjoy the pain I have to go through for the pleasure of the regulators.
Yeah, validation is very, very important from the examiner point of view. The fact that you are working with government agencies already, that lends a lot of credibility, I would imagine, to the services that you're providing.
Yeah, and it does. It provides us a whole different perspective when we have the number of licenses that we do. We're able to see those large scale macro trends. We're able to see what's going on, how these markets are shifting, how they evolve, and it's such an interesting petri dish to watch. We're getting to see that evolution, and it's a lot of fun. I truly enjoy what we do.
Yeah, we had a question early on about I had mentioned the fee income that we derived on the depository side. And the fees on the depository side that I'm seeing from financial institutions, they can be, very simple, kind of a fixed monthly fee for a checking account, or they can be based on a number of basis points uh, for cash deposits going in. I always advise my clients keep it simple. And also the other thing CEOs love to see are fee caps when they're budgeting for the next year, so that they know that their fees aren't going to go beyond a certain amount. So those are the two things I would recommend. I would also recommend a little bit of corporate espionage. I mentioned to you before, we are in this day and age of competition, fee competition, and so know what your competitors are what your competitors are charging. The other thing that I have seen, the NCUA is particularly keen on this. They want to make sure that the fees that you're charging for your CRB members, that they are adequately covering the costs associated with your CRB program. They do not want your non-CRB members or customers subsidizing your CRB program. So, in this day and age of you know, uh, downward pricing on fees, it's from a regulatory perspective, it's almost flipped on its head a little bit. The regulators want to make sure that you're charging enough so that the costs and the risks associated with your CRB program are adequately covered in those fees. So
Yeah,
I didn't get to that earlier.
no, and I wholeheartedly agree. I think there's a balance, and we've seen this is another pendulum. We've seen the ultra predatory, especially early on. I remember way back when we were getting started, there was an institution that was charging something absurd, like 399 on all deposits and all withdrawals, and then they had a whole fee schedule, and obviously that is beyond irresponsible and reprehensible. But at the same point in time, there are fees for it. I mean, look no further than the amount of SARs that have to be filed. And so, for a sustainable program, they have to find that balance. They don't want to charge fees to the extent that the second these people can get away, they will. But they do, as you pointed out, have to be able to cover their costs because otherwise, either the regulators are going to step in, their board's going to step in and say, wait a second, we can't continue to lose money on this. Yes, we agree with the mission. Yes, we understand why it's important, but there is a fine line. And it's also worth pointing out that while cannabis gets a lot of notice about the amount of fees that are paid, if you own a bar or a restaurant or something like that, and you're at one of the traditional banks, they charge you to count your cash, and it's not cheap. This isn't isolated to just cannabis. So there is that responsible medium, and I don't think that will change. In response to the question we got in, I don't think that will change for the rescheduling conversation or even with a safer conversation because their safe banking conversation, there is the responsible line that benefits all involved. And you've just got to work through that balance.
Yeah, I would agree with that, Adam. I don't think rescheduling has a direct impact on lowering fees or finance costs. The the only qualification I would say to that, it may have an indirect effect with additional competition coming into the market. And I also agree with you on Safer Banking Act. None of the compliance burdens go away.
Nope.
All of those SAR filing requirements, the enhanced due diligence, onboarding, and so forth, all of that stays in place. The only thing that happens with Safer is again, in my view, a slight de-risking, given the fact that it provides for the safe harbor from legal prosecution, which again sounds a little bit strange coming from an attorney, but I view that circle of risk as being a pretty small one, and history has proven me right so far. So I would agree with you. I don't think, and that also, by the way, is going to, if rescheduling happens or if safer happens, that's going to invite quite a bit of confusion, I think, from your CRB members or customers. And you might want to think about, having a letter drafted up, uh, uh, that kind of explains that, while we're happy that all of this is happening for you, the industry, it doesn't really change too much for us. And therefore, we have to maintain our fees and so forth.
Absolutely.
So listen, I think we've come up to our the end of our hour. For those who are listening, I have a little giveaway here. If anyone wants me to present to your senior management or boards on the topics of cannabis lending or navigating the hemp banking space, I'm more than happy to do so. That comes free of charge and at no obligation. I'm an attorney. It's my obligation to present the risks associated with those spaces in an objective way. So please feel free to take advantage of that. Adam, I want to thank you so much. This has been a delightful conversation. You've provided a lot of insights for today, and I'm sure that the folks who've attending this would agree with me. And I think I speak for Adam when I say, for those who are listening in today, please feel free to reach out to either of us if you have any follow-up questions. Adam, been an absolute pleasure.
Thank you. Appreciate you having me. This has been a lot of fun.
Yeah, it has. Take care, everyone.
Bye bye.
Bye bye.